Afternoon. Thank you for joining. We'll be starting in another 2 minutes. Waiting for more people to join in.
કઈ નહીં અમારે નથી બોલવું જાવ દે.
Should we start? Good afternoon, everyone. I welcome you all to this webinar organized by DSM and Alliance. DSM and Alliance is currently located at Jaipur, Bombay, Bangalore, and Ahmedabad. So everybody from the respective cities have also joined us today. So the topic for today's webinar is input service distributor, that is also known as ISD. So earlier this was not mandatory, but recently this has been mandatory by the government. ISD is basically a concept to distribute input tax credit by one of the registrations where they have multiple GSTINs on the same PAN. So, with the new mandatory law being introduced, the purpose of this webinar is to make our audience understand the impact and how they are required to implement this. So this session is going to be in a question and answer format where our partners Yash Dada and Rishabh Singhvi, they both will address the questions and they'll walk us through the nitty-gritties and the complications and the procedural aspects of input service distribution. So I'll take it forward by asking simple questions. Or Yash sir or Rishabh sir, do you want to add something, or should I directly start with the questions?
Yeah. Good afternoon, all of you, and we welcome all of you on behalf of DSM. I think, Shefali, we can start, and then in the due course, we'll see to it how do we take up things accordingly. You have to just ensure that you allow me to share the screen.
Sure. I'll stop sharing. You can share now. Okay, so my first question to Rishabh sir, to you is, why do you think this has come into picture? The mandatory requirement has come into picture. ISD has been there since inception, and it has been over 8 years now of GST being introduced. So why do you think there was a requirement to make ISD mandatory by the government? So what do you think?
Yeah, thank you, Shefali, and a very warm welcome to everybody on this platform. It's really gives us an opportunity to engage on certain nuances of the GST law, and one of the opportune moments are these GST councils which come up with certain decisions and gives us a thought over evolving from where we currently stand to a more advanced concept. So ISD is also one similar advanced concept, Shefali. Just to set the tone, we all know that this law has certain structural challenges, and one of the critical challenges is the taxes have to reach the consumption state. That's a question which we were aware of, at least on the surface, before the law was introduced. It was deliberated, examined, brought down in some form, and once the law is currently in motion, every day there are new challenges which are coming on the inter-account settlement among states. For the center, it doesn't matter. The question comes out as who is the correct state to receive the consumption-based revenue, and we all know that, although it's not written verbatim in the law, that this has to be driven by the end consumption, and that's where we are trying to reach at. Pre-GST, we had a service tax ISD, but this is a different animal in together, because there, even if the ISD was not mandatory, even if the ISD was inaccurate, as long as it was reaching the appropriate, to the extent approximate consumer, the central government was more or less neutral. Though the officers had some concern, the central government on an overall basis was more or less neutral. So the emphasis or the importance of ISD really didn't emerge as it emerges today. That's point one. Point two, this is more an ask of the state governments, actually, in the sense that for services, there is never a physical trail. In the absence of a physical trail, there is always going to be a debate on where these services are consumed. Okay. Now, once this debate is there, of course, the only channel partner in all this is the taxpayer. He's the only one who can decide where these services are directed. Come 2017, up to, let's say, the current year, we had this overlap between the cross-charge mechanism and the ISD mechanism as a taxpayer. Okay. While we know they are two different concepts, and Yash would really get into the depths later subsequently, the apprehension of the government was that by adopting cross-charge, which is what the orientation of was on many taxpayers, one, there was a skewness in the sense that if it was a zero tax, if it was a fully creditable entity, people were maneuvering the credits and transferring credits to units where the cash output was higher, and we were transferring less to where the credits were already overloaded. So this was the point which came up before the council, and of course a lot of the administrative officers. Can the taxpayer be permitted to continue doing this? Because if this happens, then the consumption principle would be defeated, and the consumption state would really lose its revenue somewhere down the line as well. So therefore, then the circular came up. We have multiple circulars, but one of the circulars which came up is, no, you have to have a clear demarcation on what is the purpose of cross-charge, what is the purpose of ISD. Although this is not there in so many words in law, but the circular somewhere says, and where is that if you are merely acting like a post box, I'm being very crude terms, but just for the purpose of understanding, if you are receiving a service not because you received it, you are consuming it or utilizing it, but it's because somebody else needs it and you are just the recipient of the invoice and the recipient of the service delivery in the terms of the law, the actual consumption takes place somewhere else. So therefore, if you are just a conduit or a post box, then you should transmit this invoice to the intended consumer through the ISD mechanism, right? So this was one of the points of the circular, what we call, which Yash will always will discuss in a lot more detail with nuances. We can give it a name called externally procured services. Okay. Then there was always a discussion that what about internal services between the entity? So for that, the circular said use a cross-charge mechanism. Now, this being a recent discussion in the GST Council, they of course could not make it retrospective. So they said, okay, let's continue as is until a particular framework is designed, until the law is also suitably amended to address or to differentiate between an externally generated service and a internally generated services. Let it continue as is. Come 1st April 2025, let's bring this a lot more explicit in the law and give it a color that external services are actually given to the intended consumers of those services, and the internally generated services continue to be in the cross charge. So now, to giving this background to address your question, Shefali, is that until now there was an overlap. There have been investigations on this point on whether ISD should be adopted or whether the cross charge should be adopted. To my understanding and to my experience, uh, they have accepted if cross charge is done, and because of other circulars, cross charge has not been questioned because it's fully creditable, etc. So to that extent, the administration did not have the legal machinery to enforce an ISD. They did not really have the legal machinery. Now with 1st April 2025, they've given the legal machinery. Yes, now you can enforce ISD. Now externally procured services should be directed towards the intended consumers and not just the recipient of the invoice. So merely because you're receiving the invoice and you're receiving the service, it does not mean that you are the actual consumer of the services. You'll have to still tell the officer from tomorrow, from 1st April, that this was a service which is received and consumed by me or intended to be consumed by me. These are services which the officer may ask whether it is for you, although you have received it, although you are the name, you're the invoicee or the intended recipient of this invoice. Are you the actual consumer? That question will come up in multi-locational entities. Because in a single locational entity, it's understood that it is going to be within that state. But in a multi-locational entity, this question is going to come up for many invoices, not just one. And if it is routed through the ISD, it will be acceptable. But if it comes into your regular registration, and if the officer gets a very subjective decision or a subjective view that no, this was not your invoice to be consumed, but it was your branch's invoice. To give you a very simple example, if as an auditor, I have done the stock audit of, let's say, West Bengal, and sitting in Jaipur, I have received this invoice, the officer may well within its right ask for what location you have got the stock audit done, okay, at whose behest. Even if the Jaipur office has directed the stock audit, is it consumed by the Jaipur office or it is for the end end consumption of the factory or the stock unit, etc. Then the officer may say no, then if this is something which is intended for the stocking unit, then it should have been routed through the ISD. So this is going to be the area which we need to look out for, identifying who is going to be the consumer of this service and then implement the ISD. So with effect from 1st April 25, it now becomes mandatory. And until now, they didn't have the legal machinery. Effect from 2025, this will become mandatory, and the onus is on us to prove that we are not only the recipients of these services, but we are also the consumers or the intended persons who are using these services.
Okay. Well explained, Rishabh sir. So, Yash sir, my next question is to you. So, like Rishabh sir said, there are two concepts. One is cross charge, one is ISD. So, my question to you is that are they still going to overlap, or they are going to be followed separately, or like in going forward, how are they supposed to be followed?
Correct. Thank you, Shefali. Thank you, Rishabh, for setting up the context correctly. In fact, I'll just extend to what Rishabh said. He said that because it's a states who are actually really concerned about whether the taxes is flowing to them or not. If we understand this in terms of what is the current state in India, so we say that we have one single GST in India, but that's not the case. In fact, we have dual GST, which is CGST, SGST. In case of interstate transactions, we call it IGST. But ultimately, that IGST is also a accumulation of CGST plus SGST. Because of that, today the state boundaries are very important in terms of where the tax is flowing. Now, where the tax is flowing, all of us understand this. But try to understand why government in 2025 has suddenly woken up and they've said that now ISD becomes mandatory in case of services. Think about a situation where I'm importing goods from outside India. There I'm paying customs duty and IGST, let's say in the state of Gujarat. from Gujarat, if let's say those goods move to Rajasthan, then again there'll be IGST. If let's say those goods move from Rajasthan, within Rajasthan only, then it is going to be CGST, SGST. And let's say from that, if it moves to any other state, again there is going to be IGST. Now, up till now, everything is okay. With every movement, the tax is also moving. Let's say in this final state where goods have come, let's say it has a branch office in some another state, and there they move the goods, but they do not issue an invoice. Okay. So the goods have actually been consumed in some another state, but because if the invoice is not issued, the taxes remain in some another state. Central government, as Rishabh rightly pointed out, does not have a problem, but state government has a problem. And state government would say, if the goods are ultimately being consumed in my state, I also need the tax. Now, in case of goods, all of this is very clear because goods are tangible in nature, and with every movement through e-way bill and everything, we can figure this out. However, in case of services, that's not possible because they are intangible in nature. And up till now, because there was no mechanism which was actually which could actually force a taxpayer to ensure that with every consumption of service in a specific area, the taxes are moving, there was a problem. Now, if you bring this in terms of an example, which you see on a day-to-day basis, where you have multiple GST registrations under a single PAN, think about a situation, a supplier sitting in Jaipur. It enters into a contract with somebody which has a head office or a corporate office in Bombay. And in that case, where the corporate office in Bombay is talking about a service that needs to be delivered to its branch offices, or let's say factories sitting in two separate states. Okay, let's say one in Karnataka and one in Gujarat. So if you look at it again, we have with these red lines, we have divided that there are four parties which are sitting in four separate states. Now, because the supplier of the service, he is least bothered that where the actual consumption of service takes place. But for them, the single point of contact is the head office at Maharashtra. They get a PO from Maharashtra head office. They deliver the services at the respective states wherever that needs to be delivered. For example, let's say security services. So there is a security service supplier raising an invoice on Maharashtra, delivering the services in these two specific factories, and raising invoice there, getting the payment, and chapter gets over there. Internally, what particular entity does is that Maharashtra registration or that Maharashtra head office does an accounting entry. Now, the question which Shefali asked, that is, now for this, is there a requirement for Maharashtra to actually bill it through a cross charge, or there has to be an ISD mechanism? This gains significant importance with 1/4/2025, and it gains importance because up till now, whether it was cross charge or it was ISD, both of them were optional. In fact, Rishabh pointed out that there was a circular which was issued by CBSE in 2023, which kind of gave an answer by saying that if you do either of them, that is all right in this situation. If you don't do either of them, that is also all right. But now going forward, 1/4/25, you have to identify whether it is a case of a cross charge or it is a case of an ISD. If it is an ISD, what is the compliance which is there? So now what is this which Shefali was talking about, ISD versus cross charge? Practically, if you would look at it, there is no terminology in the law which is called as cross charge. But in a simple language, how we understand this, that there is a head office, or let's say there is a corporate office, and that head office or a corporate office is, because under GST, with every new GST registration, even if on a same PAN, we call it as distinct person. That's the legal terminology. In common parlance, we call them as separate persons altogether. So it is understood that head office is a separate person, branch is a separate person under same PAN. And because head office is doing certain activities at its HO level, which generally a head office is supposed to do, like for example, consolidated finance, consolidated HR function, consolidated accounting function, consolidated marketing, sales support, and all those things. Is there a service supply which is being done by in respect of all of these by the head office to the branches? Up till now, all of us have taken different views on this. We have said, yes, it's a separate supply, and we have been billing for it by saying it's a cross charge. Some of us have not been doing it. So that's cross charge, where we understand that there is actually a supply happening from a head office to the branches. Whereas ISD as a concept, some of us, I understand, not in fact, some of us, many of us who are there right now in this webinar, and you have a multi-state presence, you must have thought about opting for an ISD registration. Some of us have done that already, where we say ISD is nothing but a pass-through, where you get an invoice from an outside vendor at a single registration, and that credit is distributed. So there the concept of tax which is being received by me on my inward supply is being distributed is the concept. Whereas in case of a cross charge, I am not talking about distribution of any credit. I am talking about an activity which is being done by the head office for my branches. So conceptually, both of them are absolutely opposite to each other. ISD is a mechanism to distribute the credit, or if not credit, the tax which I have received on my inward supplies, which has an implication across various GST registrations under same PAN, whereas cross charge as a concept is actually an outward supply which is deemed to have been done in the law by the head office to its branches. Now, Rishabh pointed out a terminology. He talked about external cost and internal cost. And that's where we have to really, as somebody who is taking care of a tax function in your respective organization, or if let's say we are consultants to the organizations, to identify an head office, what is the internal cost for an head office, for which needs to be considered, and to identify whether it should be part of a cross charge. What are the external costs on which a GST is charged by a supplier, and to see to it whether it has to be taken through an ISD route, or whether it will still continue as cross charge. Why are we talking about this? And that's where it takes sense to, for a minute, to pause and look back that what has happened. So till 2023, at the ground level, there was a lot of problem. We had various advanced rulings which gave opposite views altogether. Somebody who has transferred credit through ISD, in the departmental audits, it was told that it is wrong. You should have done a cross charge. Wherever cross charge was done, the recipient state was asked a question, who was taking the credit of that cross charge, that what is the nature of service which you have received, and we don't agree to this, and that credit is not allowed to you. So there was a situation where either or, whatever you have done, there was a problem. The matter went to the council. GST council in 2023 deliberated on this issue, and they said ISD is not mandatory. If up till now you have not done ISD, or you have not distributed credit through ISD, it is perfectly okay. Nobody is going to penalize you. Second, they were asked the question, let's say I have not done ISD. What if I have not done cross charge also? There, the answer which was given by the circular was, even if you have not done cross charge, if you are able to prove that if you would have done cross charge from your head office to your branches, and if branches would have received complete input tax credit, then that would have been also okay, no problem. So if you have not done cross charge, and you can prove that recipient would have got complete credit, then okay, it's okay if you have not done cross charge. Third question which was asked, and it was in fact relevant, and it has relevance today also. Let's say I have done cross charge, but in that cross charge, whatever value I have picked, in that value I have not included the cost of salary which is there in the trial balance of my head office. And that's because all of us are of this understanding that GST directly or indirectly cannot be actually levied on salaries. So what if I have not included the employee cost or the salary cost? And the circular said that is also completely okay. If your recipient state is not getting the credit, or your recipient state is getting the credit, that does not matter. If you're doing a cross charge and you're not including the salary, which it is absolutely okay there. Mind you, this circular is still part of the whole scheme. This circular has not been taken back by the government. So all of us should keep a note of this circular wherever we have done cross charge. The only change has been that when the circular came, in that meeting only, in GST council meeting, the council deliberated upon this, and they said now this is the correct time where we make ISD mandatory. And that's why in the last year in the budget, this mechanism was brought in the statute book, and the date was fixed as 1/4/2025. So now today we stand at a point where we have ISD mandatory from 1/4/2025. Cross charge, because it's a levy provision, it is still part of the statute book, And now in each and every case, we have to identify what would be cross charge and what would be input service distributor consequences. Yes, Shefali.
Thank
Sorry,
you, sir.
yes.
Yash sir, you and Rishabh sir, both of you have mentioned two cost, that is internal and cost and external cost. Now, uh, I want our audience to understand what exactly is internal cost and what exactly is external cost. And in case of internal cost, whether ISD to be followed or cross charge to be followed. And similarly, in external cost, ISD be followed or cross charge to be followed, and how it should be implemented and how the cost should be identified.
Okay. Okay. So now, if let's say all of us who are again taking care of these day-to-day compliances, when we would go back and look at the trial balance of our head office or the corporate office, or any office where we have centralized, or let's say management sitting there where we do a lot of activities, there will be two types of not inward supplies, but cost at the expense side of it. One is all those which are internally generated activities, which our head office is supposed to do for the company as a whole or as an entity as a whole. For example, centralized accounting. We have an IT team sitting at one place taking care of the IT infrastructure of the entity as a whole. We have CEO, CFO, the top management sitting, and they are taking care of the strategic decisions for the organization. We have tax compliances and other statutory compliances being taken care at one specified location. HR activities to be done. In some cases, the marketing is also centralized and it is not decentralized. So these are all types of expenses. We call them that activity which is HO supposed to do. However, when you would really look into the nature of it, we'll identify that majority of this includes nature of two types of cost. One is majorly the employee cost or the salary cost or the HR cost. That is the people who are sitting there, the brain behind doing all these activities. And second, wherever the HO believes that there is some outsourcing of the activity that needs to be done or some support needs to be taken, then they appoint the vendors or they appoint the consultants from whom they take the services. Like, for example, in case of a centralized accounting, where let's say we have a centralized compliance team who is taking care of GST compliances. Now, in that case, all of us, like in majority of the cases where we take care of the compliance, so we talk to the people who are sitting at the head office, we communicate with them, and through them we get the data, and then we help the organization in filing the GST returns. Now, we may be filing the GST returns for the company as a whole, where we may be taking care of the multiple compliances. In spite of that, it's an activity which we are doing for the head office only, because we are not talking to or we are not in engagement with the various people who are sitting at the branches. We may be doing compliance for the people, or we are doing compliance for the branches as a name, but we are actually in engagement with the head office. Whereas you compare it with certain cost where, like I called it as an external expenses. Compliance was one option, but let's say we have security guards across the branches. We have IT licenses across the branches. We have a common bank account where there are bank charges being charged, but I am using that banking facility at my various states or my various GST registrations across India. So these are two types of costs which are there. Clearly, ISD cannot be used for internal expenses, because ISD as a concept says that wherever an external vendor is raising an invoice of the organization, where the services are actually being used by various GST numbers in one single PAN, then you use the ISD mechanism to transfer the credit. So clearly, internal expenses we would not cover there. In external expenses, the identification has to be that where the consumption of service has taken place. If you are able to demonstrate through our books of account and conduct and documents that whatever service has been taken or whatever invoice has been raised at that particular location, where the service was actually consumed at the head office only, then in that case, it's an external cost which is being used for doing the internal functions by the organization. But if we are able to explain that all these external costs, which for which we are receiving the invoice at the head office, but services were actually delivered at the respective branches which had a separate GST number under the same PAN, then the ISD mechanism needs to be followed. So we'll talk about the example in detail, but that's the basic difference. So clearly, internal expenses, internal cost, no ISD. For external expenses or external cost also, not everything through ISD, not everything to or through ISD, where the consumption has taken place. That we will identify, and then on the case-to-case basis, we'll see whether it has to go through ISD or a cross charge. So that is going to be the basic difference here. Okay.
Okay. So my next question is, ISD has been made mandatory now, but this was there in existence earlier also. So what is the difference? How does the earlier ISD differentiate with the current ISD? And who all is it impacting?
Okay. So this question I'll take in very brief. We will not go into too much of the history. But one thing to understand for all those who think that it's a new concept, it's not a new concept. In fact, Rishabh pointed out that this was already there in the pre-GST regime. We had a service tax ISD concept prior to implementation of GST in India. It was there since 2005, and over the period of time it had evolved. Post GST implementation, the nature of ISD, which was there in the pre-GST regime, it actually transitioned naturally in GST regime. The only difference has been that from 1/7/17 till 31st March 2025, it was optional. Now it has become mandatory from 1/4/2025. Okay. Now, when I say it has become mandatory, what does that mean? In pre-GST regime, we have a lot of judgments where the questions have been asked that if, let's say, I forgot to use the ISD mechanism to transfer the credit, okay, then department raised a question in the audit that you cannot claim the credit because you have not followed the ISD mechanism. And invariably, almost to my understanding, in majority of the cases, the honorable tribunals of courts have held ISD is just procedural. If you have not followed the procedure, then it is still absolutely okay. Your SENVAT credit cannot be taken away. That circular which I was just referring to of 2023 almost said the same thing. Now from 1/4/2025, we cannot take this view. And Rishabh also said that tomorrow, if officer would find this out, he will say because it was mandatory and not followed this, you have to reverse the credit. You should have actually followed the route of ISD to transfer the credit there. Okay. Now, when we say that you ask the question that what is the difference and how government has made this mandatory, the difference has been brought by way of change in the definition. In the definition, up till now, when you will read the definition which was there till 31st March 25, it said if ISD is getting an invoice and if it has to distribute, he may do so. Now, a terminology which has been used, which you see in red, that if it is receiving an invoice which is for and on behalf of a distinct person, then they are liable to distribute. So that's the major difference in the definition of input service distributor. So that means if an office is receiving the invoices and those invoices are in respect of services which are for and on behalf of a distinct person means a GST registration under the same PAN in India, then somebody has to actually call themselves as an ISD and they have to compulsorily distribute that credit. When we say this, the ISD mechanism is mandatory. So that means the ISD has to actually take a separate registration and then follow the procedure which is actually given in the law. So the important point again to highlight, because we are saying again and again, this is not something which is a straight jacket formula. For a company which is possible to decentralize every cost of a service, they need not follow the ISD mechanism. But for majority of the companies where it is not possible to actually decentralize each and every inward supply of services, for them this concept becomes important to identify, look into their trial balance, see to it what are those inward supplies of services at their head office, which is for and on behalf of their distinct person. And if they are able to find so, they should quickly take the registration before 1/4/2025, tell the respective vendors to actually raise invoice on their ISD registration, and then do the compliance of distribution, which we could talk in a while. Rishabh, do you want to add anything here?
Yeah, I would just like to also add, like very well rightly said by Yash, that you will have to prove today from 1st April that the services have been consumed in the registration in which you have received the invoice. So there will be a lot more scrutiny of the invoices, the credit of which has been taken in the regular registration. ISD as such may not be scrutinized to that extent because it is merely acting as a pass through. But the regular registrations, I won't be surprised if an officer says under, let's say, section 155, that you are the person claiming the credit. It is your onus to prove that this is on your own behalf and it is not on or behalf of a distinct person. Because of this amendment which has come into the ISD, they will say that let's take a very simple ticket. I mean, I'm not to sound too over technical, but if you have even received a advertising invoice for a brand which is owned by the corporate office, he may ask this question: how do we know that this brand promotion is not for and on behalf of other branch entities? Because the head office does not sell these goods. The head office is only owning the brand. The sale is happening by the respective stock units or the manufacturing units. So advertising is a very simple example. You'll have all these invoices. Let's say a AMC contract, or what do you say, any travel. I won't be surprised if they go to the extent, and we have to be prepared for it, very frankly. Even a travel cost could be questioned. How do we know this is not for your purpose, this is for the purpose of the head office, or was this for the purpose of the branch office? I'll give a very simple example which it just flashes my mind. Let's say as a tax manager, you come to Maharashtra from Jaipur to attend a particular hearing and return. Okay, and you claim this credit of the travel invoice. It may sound as a small amount, but what stops the officer from asking if this travel invoice is for Jaipur and booked in Jaipur in the regular registration? He may ask, no, you move. What is the purpose of this travel? He may first ask, and you may have to give some evidence that it's official. Once you say yes, it is official, he may ask, okay, what is the office purpose? For which distinct person have you used this in travel? And then you may have to justify it further. So the officer is going to dig a lot more deeper onto an invoice, is my sense which I get, unless the council comes and puts a little plug on this. That's my point one. And the second point which I wanted to convey was when Shefali raised this question on ISD versus cross charge. It's a double-edged sword. See, what will happen is, whenever you treat some invoice as through the cross charge route, when we say internally generated and externally generated, it's very easy to say, okay, but very difficult and subjective to implement, right? So we need to be a little watchful on how we document this. A cross charge invoice, especially for an entity which has both taxable and exempt, every level of cross charge is going to make it subject to 42-43 reversal. Every level of cross charge. So head office to a branch, if there's a main head office, then there could be a regional office, there could be a city office. So if a cross charge passes through this channel, there is a likelihood that it may end up suffering a distinct person level rule 42-43, because cross charge invoices are treated like any other invoice for the purpose of 42-43 in many cases, except for banks and all, which I understand, which there is a specific circular. But for general entities, this is a problem. But an ISD, it is meant for the direct consumer of the credit. So the 42-43 impact, in my view, should only come at one end, which is at the terminal end. Correct me if I'm wrong, Yashbhai. So we need to keep mindful of both these dynamics. One, how are we going to prove where this is consumed? Two, be mindful of the fact that each method has its pluses or minuses.
Got it. So in fact, so to continue from there, basically what Rishabh has said and what basically we are trying to bring out here, that when we take an ISD registration, let's say, because we understand now it becomes mandatory, we have to identify who is the recipient of credit. We know that there is a definition of recipient in the GST law, which says that person who is liable to make the payment. However, in case of ISD, it is not like this. Like the example which I gave in the starting when I talked about management sitting at Maharashtra and a supplier sitting at Jaipur. So there, let's say Maharashtra registration will actually, let's say, make payment to the supplier in Jaipur. But in case of an ISD, rules say specifically that recipient of credit is actually the person to whom the credit shall be distributed by ISD. So it's like a circle in a sense. First of all, you identify who is the consumer of the credit, or that who is the consumer of the service, not credit. If the consumer of service is that registration where actual the service has been supplied, then in that case, irrespective the payment is made by the head office, the recipient of credit is actually that particular branch, and then ISD registration becomes mandatory there. So that's quite that's a little difference in terms of what we understand generally.
Yash bhai,
Yes.
I mean, just to for the benefit of the audience, can I simplify this? And I'm just throwing up a proposition. Correct me if I'm wrong. Can I, for a simplicity purpose, you know, if we are in doubt, because there's no exact science on this, right? If we are in doubt, wouldn't it, as an entity, from a risk perspective, be advisable to treat this as an ISD invoice rather than a regular invoice? And
Correct.
from the ISD, take it into the corporate office and the other branch.
Correct,
Wouldn't
correct.
that
In
be a
fact,
more,
yeah,
a
yeah,
risk
absolutely.
mitigating mechanism?
Perfect,
Because
Rishabh.
I see 2-3 benefits in this. One, we are complying with the ISD rules, so nobody generally can find fault with us. Two, from the ISD mechanism, of course, it goes based on turnover and you have certain parameters. In a services entity like a media or a media entity, there could be a large chunk of the turnover which is there at the corporate. Of course, in a manufacturing entity, the turnover is at the factories and the traders, but in a services entity, large chunk could be at the corporate. So the credit from the ISD may still, a large portion may come to the regular registration. So rather than exposing ourselves by taking, wherever in doubt, I'm saying, rather than taking it directly into the regular, if we are in doubt, we should route it to the ISD. And yes, certain credits may slip into the other pockets, but overall, we are risk mitigated. As long as we are ultimately a cash paying entity and totality for the entire entity, the pocket or pay could be, it may, somewhere at least secure us. What is your view on this?
Correct. In fact, I agree to what Rishabh is saying, that wherever there is a doubt, it always makes sense now because ISD is mandatory that we route it through ISD.
Yeah.
But while doing so, again, we have to keep it in mind that tomorrow when a question will be asked that how is that service which has, how would you prove that service has actually been consumed at the respective recipient? That is the responsibility of that particular recipient state to identify that how are they going to basically establish that they are the recipient of this. We'll take some basic concepts now in respect of ISD so that all of us are, all of us understand that what needs to be done at the ground level. First of all, it is applicable on whom? So as we are saying that anybody who under a same PAN, let's say if you have factory, depot, warehouse, retail outlet, branches, division, even if you have an SEZ unit under a same PAN or a service outlet, and all of them are under same PAN but different GST numbers, then ISD as a concept is there for you. You have to identify, see to it whether you are exposed to that, and if you're exposed to it, then you have to seek a registration. If you have a single GST registration across India or under a same PAN, then ISD is not for you. It's a concept which is not applicable only. Second, it is to understand that ISD, for that you have to take a separate registration. You can't do an ISD compliance under your regular GST number. So if you are able to identify that yes, you have multiple GST registrations and then the service is received at some another registration but invoice in some another location, then for that location you have to seek a separate registration as ISD, and then you have to tell your vendor that they should change the GST number of yours to your ISD number, and they should raise the invoice in respect of that ISD number, and then you are going to distribute this. As Rishabh has been saying, and as what we are saying since starting, ISD is neither a supplier of service nor a receiver of service. It is just a pass-through. It is where you are receiving an invoice and then you're distributing it. That means at the end of every month, the balance is going to be zero. It is not going to be the case that it will only receive the credit and may distribute at a later point of time. Every month, it is going to be zero there. It can be only used for the purpose of distributing the credit of the input services, no other purpose. You can't use it for any other purpose. The only purpose is to basically receive and then distribute the credit. Okay. If let's say in your group entity, you have multiple GST numbers under different PAN, where you have a subsidiary company, you have a holding company, you have a related party, if you have a group company, ISD as a concept is not applicable there. ISD as a concept is only applicable when you have multiple GST registrations under a single PAN. What does that mean? It means if let's say I receive an invoice which has an implication on my group entities, then in that case, I have to see whether I have to cross-charge it, because cross-charge as a concept is applicable in respect of distinct person and related parties both. So for my related parties, I may have to do a cross-charge. But for the distinct person, I have to use the ISD concept. So again, this differentiation needs to be kept in mind. I may receive, so wherever let's say I have an implication of an inward supply which has an implication beyond my PAN, but under the group entity, I may have to tell my supplier, please raise the invoice in my regular GST number. From that regular GST number, I will transfer to the extent it should go to my ISD, and then from ISD, I will distribute across India. And to the extent it has to go to my related party, for that, I will do a cross charge. We'll try and explain this concept in a while with pictorial presentation. As
just to
yes,
add, yes, bhai,
a little louder, Rishabh.
yeah, just to add, ISD registration does not mean it is only linked to the head office.
Correct.
ISD registration could be anywhere in the country, even at your stockyard. For some reason, if you've received an invoice at the stockyard for a head office cost or a head office benefit, there could be a ISD even there. So let's keep a wider horizon or a wider perspective that an ISD could be at a HO level, it could be at the corporate office level, it could be at the regional level, it can also be at the unit level or the cost center or profit center level. So
Correct.
it's not just a concept fixed or linked to the head office only.
Perfect. Very well said, Rishabh. In fact, what Rishabh is trying to say, if let's say I have multiple locations where I receive the invoice, but services are supplied at different places, if I don't tell the vendor that going forward, issue an invoice on my one specific ISD number at one particular state, I may end up having multiple ISD registrations in a single PAN.
Yes.
So that needs to be taken care of. We have to kind of restructure that situation, where if let's say my vendors are giving me invoices, let's say I have a head office and a corporate office where all of these activities are kind of centralized at two separate locations, then I have to restructure it, bring it under one specific location, and then intimate my vendors to issue invoice in that one particular registration. Okay. Then what are the nature of services covered? Now we have discussed that in brief a little bit on it. First of all, ISD as a concept is not applicable for goods. So not for inputs, not for capital goods. If let's say I'm receiving an invoice for stationery, let's say for my head office, that should not come under my ISD registration. In fact, we had in one of the recent audits, we identified this, that due to some error at the conceptual level through an ISD registration, the credit of goods was also distributed. The credit of goods cannot be distributed through ISD. If let's say I'm receiving goods at my head office, and for that, if I have to do a cross charge, then for that there has to be supply of goods from my head office to the other places or whatever location. And for that, it is a normal supply of goods invoice, which I will raise from a regular registration. ISD will not be used. ISD is only for services.
Yes, okay. I think we can also add that we'll have to see that sometimes goods are received in the form of services. Let's say a renting of goods. So we'll have to see the characterization at the supplier's end in the form of, if he's treated a goods transaction in the form of a right to use or a renting, then it will get covered.
Correct.
That I think we should, the members should note down
Yeah.
That
To put
just
it
by
more
saying
simply, I
goods,
think
it does
Rishabh,
not mean
yeah,
goods in general sense. It has to be a supply of goods invoice or a supply of services invoice. ISD is for all services, all transactions which are deemed as services under the GST law.
correct. That means what Rishabh is saying, if you receive a supply from a supplier, invoice has an HSN code from 1 to 98, that is supply of goods. That will not come under ISD. Any
Correct.
invoice where the HSN code starts from 99,
Yeah.
that may come under ISD. And please underline the word, it may come under ISD, subject to we are
Yeah.
trying to identify who is the consumer of that particular service.
Yeah.
Okay. Now, this is one of the examples which was government came out with a draft circular. Rishabh was saying that there is actually not much of the document available, and he's absolutely right. So, as somebody who has to do a tax compliance, a question should come that when we are discussing so much, should government not come out with some guidance as to what should come under ISD and what should not? Government tried doing that in 2019 when they came out with a draft circular where they tried to explain what should come under ISD and what should be cross-charged. Unfortunately, that draft circular was never approved by the GST Council, and hence it did not become part of the circulars which we see today. But because it came in the public domain, it in fact kind of reflected what government is trying to say, where government says if a head office, let's say, is procuring services from an external vendor, they named it as IS1 in the example. Then they said whatever head office is giving to the branch, they named it as C1 and C2 in the example. And what branch is giving to another branch, they named it as BO1, B1 in the example. Okay. Now, with this, government tried to explain again. I'm saying it's a draft circular, it is not mandatory, but it kind of reflects the understanding. Where they said if the services are consumed at the head office, don't do the ISD. It's not a case of ISD. But if the services are not consumed at the head office, but they're consumed at the branches, then it is ISD. So if you try to put this in an example, like for example, a security service. A security service invoice at the head office, but security personally deployed at the factories at different location, that is ISD. Software licenses, where licenses are used across registration but invoice at one location, that is ISD. A question may come up in respect of an audit fees. We might have a different view on the audit fees. Maybe, in fact, I and Rishabh can have a different view that where the auditing services are consumed. It is consumed at the head office or it is consumed at the branches. You may have a different view on it. Probably today, we may not want to go into that discussion that what is the nature of consumption, but at your level, if you identify that who is actually the consumer of the service, on the basis of it you will decide. If you can convince the auditor, let's say for example, if you can tell us to bifurcate the invoice and raise invoice on GST registration wise, then probably you can solve a lot of your problem where you don't have to think whether it should be ISD or cross chart, but you're telling your vendor to actually decentralize the invoice and raise it at the respective GST numbers only. That can be one of the best ways where you don't have to go into that real litigation. The
Yash bhai,
nature
I had
of,
a live case. Sorry to
yes,
interrupt. When you
yes,
raised
yes,
this audit point, I had a live case where one of the officers stated that the statutory audit fee which the corporate office is levying is benefiting entities across the country. Therefore, you should have done it through the ISD.
ISD.
So we had a very good debate where I told the officer that, sir, the statutory audit is a mandate of the Companies Act.
Correct.
That covers audit of all branches, no doubt. But it is a mandate of the Companies Act and the Income Tax Act, which is only on the head office or the registered office. It is not on the branches.
That's where my books of account are there.
That is where my books of accounts is.
Correct.
So the branches don't benefit from the statutory audit.
Correct.
It is the regulatory authorities who are benefiting. So it cannot be a service for the end for the branches. It is a service for the head office itself. And
Correct.
so the reason I'm raising this in this point here is that these are the questions you will face, and you will have to give a authoritative answer to this.
Correct. So like the examples which you see on your screen, these are typically the general expenses or general inward cost you would see in the trial balance of your head office. Now, again, what we are trying to say, all of them need not go into ISD. These are all in respect of services. Each case identify where the consumption has taken place, and then on the basis of it, we'll take a decision. Our understanding is that ISD has to be restrictive. It should not be extensive. Not every invoice which you're receiving at head office should go into ISD. But as yes, Rishabh rightly said, wherever you have a doubt, the conservative approach should be that that may go into ISD. But where there is no doubt, that does not mean that still you put everything into ISD. That probably would be a problem in that particular case. Okay. Now we come to the point manner of distribution, how distribution would take place. Well, for that, now we are coming to the specific documentation. Let's say I've taken an ISD registration on 1/4/2025. I've told my supplier that this is my ISD registration. Mind you, now going forward in ISD, I have to distribute credit which is arising in respect of reverse charge also. How am I going to do that? That's little different. We'll take it in a while. We'll take it up in a while. But these are 4 types of documents which will be received by an ISD registration that needs to be distributed by ISD. One is a simple invoice issued by a supplier for supply of services to ISD. Second is a debit note which is issued by the supplier. That debit note is again in context of the original invoice. So if the original invoice is on the ISD, then if let's say supplier has to issue a GST debit note, that will also be on the ISD. Third is a unique case which you do not find in a regular registration, where there is a specific ITC transfer from a regular registration to ISD. That is 54(1) capital A and then bracket clause A. That's where a regular registration has received an invoice, and that invoice actually pertains for distribution of credit. That credit a regular registration cannot distribute. So that they have to actually give it to ISD, and then ISD is going to distribute it. In fact, this is the mechanism which we are going to use for reverse charge mechanism, where a reverse charge credit needs to be distributed through ISD. And last is a self invoice, again, which an ISD is going to do wherever it has received an RCM invoice and it has to distribute the credit. See, these are the 4 sources of credit which an ISD will receive, and this ISD has to distribute. Now, when we are saying it has to distribute, that distribution will not be only on the basis of turnover. First is on specific. So if ISD is able to identify that if I have received a credit which belongs to a particular GST number, it will go to that particular branch office of the GST number. If it belongs to more than one GST number, but clearly identifiable, what is the value of it, then it will go to those specific registrations. If not, then third, it will go on the basis of a turnover. It belongs to company as a whole. And last, which is branch office and head office, if it has both, then again, it is on the basis of a turnover. So as we are explaining, we are not saying every distribution will not be on the basis of a turnover. First, it will going to be on a specific basis. Where I cannot identify specific, then it is going to be on the basis of turnover. Okay. Next, what is the nature of credit which is going to be distributed? So IGST, if an ISD receiving, IGST will be distributed as IGST. Though you can see or central tax also with an asterisk mark, but that's the difference between the section and the law. Section says IGST credit you can distribute as CGST also. When if let's say my supplier is sitting outside my state, ISD, let's say my supplier is in Bangalore, I have a ISD registration in Rajasthan. When my supplier is issuing an invoice to me in Rajasthan on ISD, it will raise IGST invoice. Let's say I'm distributing that credit through my ISD registration to my another registration in Rajasthan. Now section says I can distribute that as CGST. However, rule says I can't do that. IGST I have to distribute as IGST only. So there is a difference in the manner in which the section and rule is written. Probably because we are at the implementation stage, we will not go into litigation. So we will follow what is the conservative approach. So the conservative answer is IGST as IGST, CGST as CGST, and SGST as SGST. If it is interstate, then in that case, everything is IGST. My IGST, CGST, and SGST has IGST only. So if it is within state, distributing from Rajasthan to Rajasthan regular registration, the manner in which my inward supply is receiving, I will distribute that IGST as IGST, CSC, S&S. If I am distributing from my state to another state of my registration, everything is IGST. So this I have to keep in mind so that my respective recipient state is eligible to take the credit. Then ISD has certain conditions that needs to be followed. These are 6-7 conditions. These are mentioned in the rules, but they have to be followed. One is ISD has to prepare an ISD invoice. So that's an additional compliance that needs to be done. ISD invoice need not have an IRN number. So you don't have to generate IRN or QR code on the ISD invoice. There is an exception for this. So IRN is not applicable on the ISD invoice, but ISD has to prepare an invoice. That invoice is going to be GST registration wise. So if let's say ISD has to distribute credit to 5 GST registrations, then in that case, it will raise invoice on those 5 GST registration and there will be 5 separate invoices. Okay. Then when ISD is distributing the credit, it will have a credit available and the credit to be distributed. That credit to be distributed cannot exceed credit available. What is credit available? Credit available in simple terms is the credit which is appearing in my table 6A. ISD is going to get the credit from a supplier in a table like we have GSTR 2B for a regular registration. For ISD, we have 6A. I will see the invoices in my 6A. From those 6A invoices, I will make the accounting in my books of account also. That means I should physically receive the invoice at the ISD. If the ISD has made the accounting in the books of account and that credit is in my 6A, that credit I am going to distribute. So I cannot distribute the credit which is not there in my 6A, and I should not distribute the credit which is there in my 6A but not part of my books of account. So when I have both of them, I am going to distribute that. That's second. Third, which is very important and that needs to be understood, ISD is just not a mechanism to distribute an eligible credit. From the ISD, I have to distribute the ineligible credit also. So what is the example? Let's say I have a supplier of a rent-a-cab service supplier for which I have done a contract for Pan India. And that service supplier raises an invoice on my ISD registration. Now we know that rent-a-cab credit is generally not available barring few exceptions. So let's say that credit is not available. But that credit needs to be distributed by ISD separately. It will go to my respective recipient and then recipient will actually put that in GSTR 3B and then reverse that particular credit. So to go back to the original thought, ISD is just a pass-through. So ISD will receive credit for eligible, will receive invoice for eligible credits. It will receive invoices for ineligible credit also. ISD has to distribute the eligible credit and ineligible credit separately. So just like I gave the example in the starting, if there are 5 recipients who have to receive the credit, I'll make 5 invoices. If I have to distribute eligible and ineligible credit to those 5 registrations, in a month, I will raise 10 invoices. Two ISD invoice on each registration. One invoice for eligible credit, one invoice for ineligible credit. And then in that case, the recipient will actually put both the invoices in the GST in their GSTR 3B, take credit of the eligible credit and reverse the credit of the ineligible credit. Okay. Then the credit which is attributable to a specific registration, this we have just discussed in the previous slide, that will go to that particular registration only. Wherever it is not attributable to a specific registration, it will be distributed on a pro rata basis. Pro rata is turnover of that particular recipient state divided by aggregate turnover. We'll discuss what turnover needs to be taken. ISD has to distribute credit on a monthly basis, irrespective that I'm filing returns on a quarterly or monthly, but ISD has to file returns on a monthly basis. It will distribute credit on the monthly basis. There is one thing which is mentioned that ISD has to distribute the credit in the same month. That is, what is available credit is there. They can't take, ISD cannot think of keeping the credit and distributing it next month. Whatever ISD is actually taking the credit, it has to distribute in the same month. At the month end, the balance has to be 0 in the ISD registration. It can't keep the same. These are 6-7 conditions which ISD has to follow. When you see this, you realize there needs to be a requirement to change in the ERP. ERP needs to be updated. You have to ensure that you actually put this in your GST, in your books of account. If whatever accounting software you're using, there has to be a separate code needs to be created and the invoices has to be accounted for accordingly. We talked about turnover, that when it needs to be distributed on a pro rata basis, what turnover you have to going to take. Now, first thing to understand, which Rishabh was also talking about, that you have to distribute the credit irrespective my recipient state can claim the credit or not claim the credit. He was talking in context of cross charge. That is applicable in case of ISD also. So let's say my IS in my company, I do 2 types of businesses: exempted business and taxable business. I know that against exempted supplies, I can't claim the credit. Now, when an ISD is distributing the credit, The recipient state will decide whether they can claim the credit, not claim the credit, or they can claim the credit proportionately. But ISD is going to distribute it. When they're distributing, they have to see the turnover of that particular state. Now, which turnover they will take? If let's say when I'm distributing the credit pro rata, which is not for a specific registration, then I have to take preceding year turnover. What is the preceding year turnover? Turnover of that particular GST registration in the GST which I had declared in the previous year. Generally, the turnover which we put in our GST are 9. That turnover is going to be that turnover as per my annual return. That total turnover is going to be that turnover which will become the turnover of my particular state. And then I'll do an aggregation of those turnovers. So that becomes the total turnover of the entity. And then I'll put the formula for the total common credit and I'll distribute accordingly. Let's say I have a new registration in this particular financial year. Let's say in 25-26, I take one more registration under GST. Then I may not have a previous year turnover. Then what am I going to do? Then the provision says if you do not have a previous year turnover, you take the previous quarter turnover. So let's say in April 25, I take a fresh registration. And can I distribute credit? The answer is going to be 0 because in the previous quarter, there is no turnover of that particular registration. But in the second quarter, when that registration is going to have some turnover in the first quarter, then that quarter turnover is going to be taken. So till the time for the first year, the quarter-wise turnover will be taken for a particular registration. If I do not have a previous quarter turnover also, then no distribution of credit will be done to that particular registration. So again, the turnover need not be your financial turnover, that turnover which is coming in your trial balance. Don't get confused with that. Your turnover is the turnover which you're declaring in your GST returns, be it your taxable turnover, exempted turnover, whatever it is. But the turnover definition which we have in GST, you have to take care of it. Either previous year turnover, if previous year turnover is not available, then previous quarter's turnover. Okay. Then 2-3 things in terms of documents, and then we'll take forward the next questions. Recipient state has to ensure whosoever is taking the credit that they are in possession of an ISD invoice. So as we explained that ISD has to raise the invoice as an ISD invoice, recipient state need to keep that ISD invoice with them, original invoices with them. So when their officer is going to audit or ask a question, they should be able to produce that ISD invoice to them. Okay. ISD invoice need to have certain details. So those details are mentioned in Rule 54. So this needs to be actually incorporated into the ERP, where ERP has to ensure that ISD invoice gives all these details. Again, unique number, date, and all those things. Important thing is that in the ISD invoice, there is no requirement to write the taxable value. That means if my ISD invoice only has the credit amount, which may be eligible or ineligible credit, that's a separate issue. But if my invoice, ISD invoice, which ISD is going to prepare, if it only has the tax amount, it is absolutely okay. But mind you, when you will file the ISD return, there you need the taxable value. So there is a difference. In your invoice, if you want to write the taxable value of whose credit has been distributed, you may do so, but it is not mandated in the system. So in your ERP, you may make the changes accordingly. But when you're going to file your ISD GST return, that is GSTR 6, there you have to write the taxable value. And there are going to be 2 ISD invoices, one for eligible credit and one for non-eligible credit. So those, practically it is always suggested that you keep 2 separate consecutive numbers for eligible credit distribution and non-eligible credit distribution. This is something which is actually a big pain point in ISD. This is something that really needs to be taken care of. And probably this is where a lot of tracking would be required. Like once I'll distribute a credit through ISD, tomorrow, let's say a supplier issues a credit note. Okay. Now we discussed that we will distribute the credit based on the turnover when it is not a specific credit. When I'll receive a credit note from a supplier, ISD will also issue a credit note. So this is called as an ISD credit note. Now that ISD credit note, the distribution of that credit note where the respective recipient state will reverse the credit, that will be in the same ratio which was there for the original credit. So an example, let's say I distributed a credit of ISD of April 2025 of, let's say, my invoice to you of whatever, let's say 1 lakh rupees plus 18,000 GST. Tomorrow I issue a credit note, let's say of 25,000 rupees. Then in that case, and I issue a credit note after 6 months. So when the credit note will be issued after 6 months, the distribution of that credit note, which will be on the basis of a turnover or whatever basis was there of the original credit. So this tracking needs to be done by ISD, and this is quite important, meaning thereby the ISD credit note distribution cannot be on the basis of the turnover of that particular month. It has to tag back to the original month in which the distribution of the original invoice credit was done. And again, it has to be on a one-to-one basis. Okay. So what we are really talking about is identifying on one-to-one basis of the invoices, whether I need to distribute to a specific GST number or I need to distribute to more than one GST number or all GST number. I have to identify whether this is eligible or ineligible. Subsequently, I have to identify if a credit note is issued, then how did I distribute the original credit? And then on the basis of it, the credit note distribution is going to be taken, is going to be done. Now, this is something which is probably in last 1 year or so, you would have attended our budget webinars also. When we were talking about ISD, we said that when there is a change in the definition of ISD, there is one more thing now which is mandatory for ISD to distribute the RCM credit. So what is that distribution? Let's say, for example, ISD receives an invoice from an advocate, and the advocate basically is giving services to 4 locations for let's say fighting a matter in relation to labor laws at 4 specific locations. It gives an invoice at one particular location. Now the problem is ISD cannot pay tax at a reverse charge. So then what is going to be done? How that reverse charge tax will be discharged, and then how ISD is going to distribute the credit? Well, the answer to that is, if let's say I have an invoice on which tax needs to be paid by me under reverse charge, then I will pay the tax under my normal registration in the same state where my ISD registration is there. So that means I have to ensure, then I have to see to it that I have a regular registration in which I pay tax under reverse charge. Then on the basis of that, when I pay tax under reverse charge, I will raise a 54(1)A invoice. Okay, 54(1)A invoice, which I was talking about, a special invoice from a regular registration to my ISD registration. Then my ISD registration is going to distribute that credit on whatever formula which we discussed, either on an individual to individual basis or on the turnover basis, and it will issue a self invoice also. Okay, and then on the basis of it, that credit is going to sit. That is one way. Take another example. I refer to that we may have a lot of group companies under which I might receive an invoice in one company. So let's say there is a supplier S which has issued an invoice for software licenses, and it is billed to my HO at Delhi of A Limited for 1000 plus 100 rupees, 1100 of GST. Now that A Limited knows that out of that 300 actually belongs to the head office only, and rest balance 700 belongs to my branches. So what head office will do as a regular registration, that if they are receiving an invoice and they have told to the supplier ki please raise invoice in my ISD registration, but the supplier is not understanding, it continues to raise invoice in my regular registration, then what my regular registration will do, regular registration will keep that credit of 300 rupees which it belongs to it. 700 through 54(1)A invoice, they will transfer it to ISD. So they will raise a specific invoice under 54(1)A and they will give it to ISD. Then what ISD is going to do, ISD is then going to decide how much of this belongs to branch 1 and branch 2. Let's say for the example, we have taken 50-50, it belongs to branch 1 and branch 2. So then it will raise an ISD invoice of 350 plus GST, 350 plus GST. And then on the basis of the ISD invoice, branches are going to take the credit. So Rishabh was raising a point that tomorrow you may raise a question in the regular registration. That officer may ask that how have you distributed the travel credit? So if tomorrow your vendor, let's say, says, I will not raise invoice on the ISD registration, I am not going to change anything, then also there is a provision in the law as to how you can transfer that regular credit from a regular registration to ISD, and then from ISD you need to distribute it to other registrations. So that means, though first you should tell your vendor,
Correct,
that please raise invoice in my ISD registration.
correct.
But if the vendor is not complying, that does not mean then you can say because vendor is not done, how am I going to do it?
Correct.
There is a provision in the law that how you can give it to ISD, and then ISD has to comply with this. Okay.
And we like Yashbhai, just to add, we should, to the extent possible, avoid this mechanism because it will unnecessarily boost up your HO turnover
Yeah,
with your
yeah,
GSTR 9.
correct.
And
Absolutely
it will
right.
give a very skewed turnover, and then it becomes a problem. So we
Correct,
should, to
correct.
the extent possible, use this as a last resort.
No, no, in fact, I agree it should never be used. But I'm saying if you don't actually map
Correct.
your ISD properly, tomorrow department is going to use this.
Yeah,
And they
yeah,
will
yeah.
say, why have you not followed this mechanism in your regular
You're right.
registration?
You're right. Absolutely
That's why
right.
mapping is important.
Absolutely.
I absolutely agree. Then this is in respect of ISD returns. ISD have to, they'll first receive, their supplier will file GSTR 1, you will get this, ISD will get in 6A, they will file their GSTR 6 by 13th. It will appear in the respective recipient in by 14th in 2B, and then recipient is going to claim the credit by 20th in GSTR 3B. So that is the procedure of filing of returns. That means you have one more compliance that you have to do between your GSTR 1 and your GSTR 3B. If you have an ISD registration, in 2 days between 12th and 13th, you have to file your ISD return so that your recipient is going to claim the credit. Otherwise, recipient may have a problem in claiming the credit. If you do not, let's say, have any credit for ISD distribution, still you have to file your nil ISD return. I think all of us who have ISD registration, we are doing so. If you delay filing your ISD returns, there is a late fee of rupees 50 per day that needs to be followed. Credit needs to be distributed to all units which are registered, whether they have a taxable turnover, non-taxable turnover, fully exempted, export-oriented units, or SEZ units. So for SEZ units also, if that is your recipient, you have to distribute the credit to them, and then SEZ unit will either claim the credit, use it for their domestic supplies, or file a refund for this. In fact, there is a High Court judgment which says that SEZ units can file a refund for these ISD credits. So that needs to be followed in this particular case. So yeah, this we have explained that if, let's say, through ISD, if you receive a credit against which you want to claim a refund against zero rated supplies or an SEZ unit or a EOU unit, you may do so. There is no restriction on it. But wherever there are SEZ units, this is going to be one challenge, because now SEZ units today, they do not receive any invoice with tax for their authorized operations. From ISD, they are going to now receive an invoice from their ISD registration with tax. They have to actually claim it there in their GSTR 3B, and then they may use it for payment of their output tax for domestic supplies, or they have to file a refund under LUT or with payment of tax, whatever be the case. Okay. I think this Rishabh, this is one that error. If ISD, let's say, commits any error, they again have a time limit till 30th of November to rectify this. Basically means their October return becomes crucial, like any other return. The problem is there in this ISD, which is the big problem, that why ISD registration and compliance is going to be a little bit of a challenge when you get your audit done. Now, friends, you may have a ISD registration in one state, let's say in Rajasthan or in Bangalore, because both of us are here. So let's say wherever you may have your ISD registration. But let's say you distribute a credit to your 10 registrations. So now, who is going to audit whether what your distribution was correct or not? Okay. One answer can be that only the officer of the ISD is going to identify this. Unfortunately, that is not the case. There is a circular number 71 of 2018, which says that the audit of this or assessment of this credit distributed by ISD will be done at the respective state. So that means if, let's say, from ISD a credit of only a small credit has gone to, let's say, Tamil Nadu, then Tamil Nadu officer is going to check whether the credit which has come to Tamil Nadu is proper or not. And for that, it will ask for the complete record of ISD which is there in my Rajasthan. So that means your ISD working is important. That will be checked not at your ISD level, it will be checked at your recipient level. Whatever reversal is required to be done, your recipient respective officer is going to issue a notice. They will call for the information, they will ask for it. And hence that is why this record will be identified by different officers at different states where distribution is to be done. And hence it becomes very important that this record is kept very meticulously, very clean. It is not on the Excel sheets only, it is well documented, so that tomorrow when it is being asked, it can be asked by a state officer, it can be asked by a central officer, depending upon in your state who is a judicial officer. And then they will try to understand this. So that's where this ISD becomes a little bit tricky when the assessments will start. Though today it is too early to talk
Absolutely.
about this, but
Absolutely.
because we are at the inception, we are trying to implement it. The implementation has to be absolutely clear. Otherwise, that question, when it will be asked at a different state, then you have to travel down to that state to explain how have you done the distribution here.
Correct.
Rishabh, any thoughts on this?
Oh, actually, you brought out a very beautiful point. They didn't flash me also that an officer in Puducherry can examine the ISD of Delhi, which is getting all over India. And
Correct.
Puducherry might have received as low as 1 rupee also,
Correct.
which is a little bit of a dangerous thing, like a very well point. And second point, Yash bhai, is if let's say you do a calculation error or you do perform an error in ISD, you will pay the credit or the turnover you've adopted is incorrect. You will pay the credit where it is excess. But where is the mechanism to claim the credit where
There is no
it is
mechanism
short?
claiming the credit. Correct, correct.
Well, it's a dangerous thing which we should really think about. That's how accurate our ISD returns have been. There is no going back. Once you've transferred it, there is no mechanism in law to retransfer that back and give it to the right entitled person, because these work on a electronic module of the credit ledger. You can't make credit ledger, you can't make entries in the credit ledger by your own form. It has to happen through a return. And this is
Correct.
going to be a very sensitive area to be mapped. And third thing, which just a question came up in my mind, and I was just pondering over, as in when we implement this, we are going to face questions, we as professionals as well. When you are doing the HO trial balance, there will be a lot of ISD expenses also, which might have been there in the trial balance. We may have to carve that out from the HO trial balance.
Yeah, correct. And there has to be a
You have
separate
to have a
trial balance
separate
for this.
ISD trial balance, if my understanding
Yes,
is
yes,
right. You'll have
absolutely
to have a
right.
control account in your SAP module or your ERP, which makes the ISD itself a cost center or a distribution center. I think we'll have to develop a new thing, distribution center, and that has to generate its own trial balance. And
Correct.
that trial balance is going to be the phase for any scrutiny whenever the officers are going to ask us.
Correct. Absolutely. In fact, that's what we are now talking about. What is the preparedness that needs to be done that once we know? First of all, I think this understanding session, which we have kept today, all of us now to understand the basics about this. Once we understand, it is important that we train not our accounts team or finance team, but also the procurement team who takes care of the various services that they procure for the company as a whole, and tell them to the maximum possible extent, if we can decentralize it, we should decentralize this.
Yeah,
Still, if
absolutely.
anything is left over, identify,
Absolutely.
take your ISD registrations before 1/4/2025. And generally, wherever you're going to take an ISD registration, as Rishabh Bhai was pointing out, you're going to have two registrations there. One is a normal registration, one is a separate registration for ISD, and one is second normal registration, which will continue. If your HU is supplying any goods or services, that regular registration is going to be used by this. If that HO has to do a cross charge, as we were discussing, that cross charge is not going anywhere. If it has to do a cross charge, that cross charge will continue there at the HO level. And then in that case, for those cross charge, a regular registration will be there. And for your ISD distribution, you'll have a separate ISD registration there. Once you do this, it becomes important that you compile the list of input services that have to go through ISD. Once you compile the list of services, tell your vendors to you raise your POs accordingly with your new ISD registration. Tell your vendors to be absolutely clear. We understand when you will tell your bank is going to take a lot of time to actually change in their master your GST number. Telephone lease lines, internet lines, insurance policies. These are all those cases where you need time to actually intimate to them that if it needs to be routed through ISD. 1/4/2025, after that, whatever invoice you receive for which ISD needs to be followed, it needs to have your GST number accordingly. And most importantly, use this 10-12 days of time to actually make changes in your ERP, where you actually update your ERP, have a separate facility of a trial balance for ISD, where you have a receiving all the inward supplies there and how a distribution needs to be done. To the possible extent, it may not be something which we will be able to do it immediately, but over the period of time, we should plan to ensure that is ISD distribution is automated through the system. If it is going to be manual, remember the assessment will not be done at your location. The assessment is going to be done at the separate location by the tax officer, and there a requirement would be there to basically explain to them that how have you done this. So this is the preparedness that is required. No doubt that all of us are there to support, guide, and help you in a manner wherever, let's say you are stuck, you have a question in respect of ISD, what needs to be done, wherever scrutiny of a trial balance needs to be done before, and to identify that what are those ISD provisions applicable. At DSM, we are there to support you there. In case there are any questions, now we'll open up for taking those questions. I can see some questions in the chat box also. Shefali, you may ask, you can take them up. And if in case there are any other issues which you want to take up, we may do so.
Thank you, sir. Thank you, Rishabh, sir. I'll read the questions and maybe one of you can address them. This is from Sukhdevji. For on behalf, whether these ISD authority, this gives authority to ISD to collect invoice and transfer credit, or this amendment gives any more power. Further, without any agreement among ISD and distinct person, only by way of this amendment can the Act give such power to ISD.
Correct. So I'll take this up, Rishabh. So basically what we have explained, try to say is that it's not about the contractual agreement, but it's actually about where the services have been consumed. So like we gave an example of a security service where it is on the face of it quite evident that invoice may have been received at one particular location, but services have been consumed at other location. That now needs to be followed through an ISD mechanism. Vis-a-vis, you compare this with an auditing services where the invoice is received at one location, and what we are trying to say that we should be able to justify that it has been consumed by the HO only because it is an HO function rather than actually a distribution of a credit through ISD. So on a case, this is not something which is contractual, but this is something which is factual. At an invoice level, that needs to be identified that who is the actual consumer of the service. Mind you, we are not talking about benefit of a service. The benefit of a service may be for the organization as a whole, but who is the consumer of a service would actually determine whether it will flow through ISD, or if the consumer of service is only HO, then it will not flow through ISD. Maybe in cross chart that quantum needs to be taken care of.
Okay, got it. Next question is from Ankit Ji. Can there be two ISDs on same PAN?
Yeah, we discussed this, that if you have at different location you're receiving the invoices, where invoices at one location recipient is other, it can be there, and this needs to be avoided. This is something which you should not plan that you have multiple ISD numbers, but rather it should be planned in a manner that you do not end up having multiple ISD numbers.
Okay, next question is from some unknown person, but they want to ask, in case of RCM, who will discharge the RCM liability?
Regular GST number will discharge the liability, then they will raise an invoice on ISD, and then ISD will distribute it. If it is, again, as we are discussing, if it is a foreign on behalf of the distinct person.
Next question is from Kartik Lohia ji. He's asking if we ask the consultants to kind of decentralize the invoices, still there would be requirement of ISD registration.
How accurate your decentralization is.
Yeah,
I think that
exactly.
will be the answer.
Correct. If you have too much of an accuracy, you can do that. But think about a situation where you have a common bank account across India. There you would have given only one GST number, and there it may have a bank charges for different GST numbers. So then there would be a problem. You would need an ISD registration there.
Okay.
Like Yashbhai stated, and very rightly stated, the priority should be to decentralize.
Correct.
But if you can't decentralize, then you use ISD. And if for some reason the credit doesn't reflect in your ISD and reflects in your regular registration, then route it to the ISD for further distribution. I think that should be the sequence which we should adopt. It's very easy for said, but it is a implementational challenge. That's why, to the large extent, wherever our central procurement teams have had consolidated contracts and consolidated invoices, we should ask them to decentralize it. I think that's going to be the level of preparedness which Yashbhai is speaking about, that you need to go decentralized to the extent possible all those contracts which are clearly identifiable, and only the residue which is left over, that's what we need to put it under the ISD bucket.
Correct.
Okay, so the next question is from Vinod sir. Do we need to maintain separate books for ISD registration?
I think we discussed this. Yes.
Okay. Next question is from Ashish ji. Okay, his question is, how do we distribute the credit in cases where we have multiple GSTINs and the turnover there is either exempt or there's no turnover at all? So how do we distribute the credit in those cases?
So I think he's talking zero rated. He's talking about zero turnover.
No,
Zero
I
turnover.
think he's referring to no external turnover. It may be the branch office is billing the head office.
No, but
So
that's
you'll
a
have to take,
turnover.
so we'll have to take all turnover which is as per 9, which Yashbhai has already stated.
Right.
If
But
you
if
are
let's
not
say,
having a turnover in branch, then you need to just think about it carefully. There must be something missing there.
correct. Correct. There can be also a situation where, let's say, you only do an exempt supply from one particular registration.
Yes.
Now, maybe you can consider getting it deregistered. If in a particular
Yeah.
state you're only doing an exempted supply, you can consider doing it deregistered. Once it is deregistered, then you need not follow ISD there. So that again, that's
But
that
again,
again
a
on a
catch
case.
of RCM and all that. No?
So that again, if that RCM is there, then again you cannot deregister, and then you will have to distribute credit there, and it becomes a cost.
Yeah.
But again, if the affairs can be planned in a manner that you do not have any RCM cost in that particular registration, only exempted supplies in the output supplies, then consider it as getting it deregistered and then not to have an ISD cost there.
True, it may. The lesser the registration, the simpler is the exercise. Actually. Very true.
Correct.
So we moved from a era where in 17 we had as many registration as possible.
Right.
Now we'll have to consolidate that and see what is only relevant and keep them active. The defunct and the inactive registrations, we should surrender it actually.
Absolutely right. Yes, Shefali.
I think these questions are done, but I have a
There is
question.
one more question, Shefali. Which credit we have to distribute? Credit shown in 2B or match credit only? No, sir. It will be credit appear in 6A.
6A.
6A credit matched with the books of account of ISD. So again, ISD has to match that credit with the books of account and then distribute it accordingly. Though
But Yashbhai, just a case, just for the benefit of audience. What if we have received the credit in 6B, but the invoice comes much later? Our payments also happen much later.
Correct.
We still, I think, should distribute it.
But Rishabh, how? So in fact, in one of the audits recently, this issue was faced. Basically, what Rishabh Bhai is trying to say, if I have a credit in 6A in current month, but I do not have invoice in my books of account in current month of ISD, then should I distribute it, not distribute it?
Correct.
Now, if you literally read the rule says distribute it.
Yeah.
The problem is on what basis you're going to distribute it. Whether it will be specific distribution or on the basis of a turnover, you don't know. In one of the audits, we raised the question was raised at the audit level, where they raised the audit memo by saying because you have distributed in the next month, we will not allow that distribution. So subsequently, on the basis of an answer, they agreed to it. My personal view would be only which is appearing in your 6A. And then whenever it is appearing in your books of accounts, subsequently you should distribute it. Though again, it goes against the literal reading, but that's the only practical way of doing it. Otherwise, it would completely mess up the books of
And
accounts.
I'm not aware too much of the portal. Will this go and sit in the IMS of the recipient entity whenever it's implemented?
Yeah. It will sit in the IMS when you raise the ISD invoice.
Yes, right. So then in the IMS he can defer it if he wants.
He can defer it. Correct. Absolutely.
So if we defer it in the IMS, and anyway the recovery will, if any, has to happen at the
recipient level only.
Can we take it only in the return once we've met all the conditions, etc.? So defer it in IMS rather than deferring it in ISD. Can we do that?
That can be one possible way of looking at it. But only problem would be if ISD does not have an invoice, how will ISD decide which turnover ratio to follow?
Correct.
So that's the only problem here.
That's going to be a problem. So.
Yeah.
Okay, so we have one more question. This is in return to the question answer you gave about deregistering registration. So she's asking, aggregate turnover includes exempt supply. So can you please explain how do we deregister a registration which has only exempt supply?
Okay. So again, it's an interpretation point, but the interpretation, because it says that every establishment is a distinct person, and then at a distinct person level, you will decide whether you are exclusively engaged in the business of making exempt supply or not. So let's say if in a particular state I'm only making an exempt supply, there is a possibility to say that under section 23, I am exempted from taking a registration. I can take benefit of 23. Again, it is subject to a question raised by the revenue. But if, let's say, I believe that this has a lot of substance in this argument, that if in a particular state I only have an exempt turnover, I can take benefit of section 23.
Okay, got it. I think we're done with the questions.
If anybody wants to raise hand and ask a question, you may please do so. We will
What
unmute.
registered RCM will you pay the if it is raised on of a registered GT, let's say a registered GTA raises an RCM invoice on the ISD?
Not possible.
Not possible. So we'll
Not
have to
possible.
avoid that.
No. For that, they have to raise invoice on a regular registration, and
then only route it.
yes.
Okay. Good.
Anybody has any question, you may again raise hand. We'll be happy to answer.
Always a pleasure to listen to Yash bhai.
It's a mutual pleasure, Rishabh bhai. But we thank all of you for
Thank you, everybody.
sparing time on this Friday evening on this. Yes, Karthik has one question.
So yes, I have this one question. Let's suppose a CSR is applicable on a company. So for this CSR expenditure, generally it is like the expenditure are being incurred on the HO level. So does ISD is ISD applicable on this CSR expenditure as well? If the let's suppose the invoice is GST invoice.
Correct. So Karthik, first in respect of CSR, it is an ineligible credit now. It is specifically part of Section 17.
Yeah.
Now, in that case, as we discussed, and Rishabh was answering to it, that because audit, it is a mandatory requirement under Companies Act. And once it is a mandatory requirement under Companies Act, that is something where my books of account and everything else is there. They have to really comply with this. So I understand, and again, that's my personal view, that this service, whatever services I'm receiving under CSR, these are they are actually consumed at the head office only, and that need not follow the ISD route, meaning thereby those invoices should be on the regular registration of the company at the HO, and the credit reversal should be done at that particular state only, rather than actually distributing it to ISD and then reversing the credit in those particular registrations.
Okay, so basically we need to focus on the point that where the service is being actually consumed.
Correct.
Right. Okay, thank you.
There is one request for sharing the presentation that definitely will share through email, and respective CRMs are going to share it.
There's one more question. When the supplier gives input in other state, that his supplier is invoice in Haryana, but input is given in Rajasthan. Sir, can you please unmute yourself and ask the question?
Nivati, if you can unmute yourself and elaborate on the question so that we understand the facts correctly. Neeraj, you can unmute yourself now and raise the question. Okay, if I understand the question correctly, what basically is trying to say, the credit is that one supplier has given the invoice in other state, supplier is invoice in Haryana, but input given in Rajasthan.
Probably he means that it's a CNS invoice.
If it's a C&S invoice, and like for example, in case of a renting, now renting invoice, typically the ISD in some another state. that any which way renting invoice cannot go through ISD because renting services are consumed in that particular state only. So they should never be part of ISD. So that being the case, clearly that would not be applicable there. One more question is there, Shefali. Also in e-commerce inputs, what are the necessary steps to be taken? Again, if in respect of an e-commerce inward supply, which is there of the e-commerce operator, if let's say though that is in respect of the supplies which are being done by various states, then definitely it has to route through ISD. If not, then it would belong to a particular state. So generally, in case of e-commerce, again, if you have a multiple location through which the supply is being made, then you should actually tell your e-commerce to update your GST number of the ISD, take that in the ISD, and then if you are not aware of the specific supply, then you distribute it on the basis of the turnover of all those states from where you are making the e-commerce supplies. It should not be distributed across the company or across all registrations, but only from those states where the e-commerce supplies are being made, that credit should be distributed in those states only. I think we can
Yeah.
close now.
Yes, we can close. Thank you so much, everyone. If at all you have more questions, you can always write to us. Thank you so much.
This presentation is also there on YouTube. In case you want a reference for reference value, you want to refer it again, you would be able to find it on YouTube. Again, I'm saying at DSM, all of us are available for your assistance. In case you have any question in respect of implementation of ISD, thank you so much for your patient hearing.